Welcome back to another technical analysis video, guys. Happy Sunday. Before the Giants lose again today, I figured why not jump on the charts, prepare myself for this upcoming week, and also prepare you. So today we're going to go ahead and talk about the NASDAQ futures, the S&P 500 futures, the SPY, and the QQQ ETF. Get all those levels, get all those very important zones to be watching after that slight downside on Friday. And then after that, we'll jump into some main equities like NVDA, like Tesla, like AMD, some of the semiconductor analysis that I've been tracking as well. So hope this acts as a just overall analysis into next week for you guys. Prepare yourself for the last week of 2024 and hopefully start 2025 the right way. If you guys want to stay tuned, make sure to subscribe to the channel. Also, if you want to join the Discord and trade live with me on a daily basis, there is a code right now, NYE, 20% off all subscriptions. Go ahead and check it out. With that said, let's get started. NASDAQ futures. The thing that happened here last week and on Friday was this major rejection of 22,120. So right here, we can see there were some previous rejections around this time frame, and we can see again on both Wednesday, Thursday, and into Friday, we saw those rejections once again. The question here is the NASDAQ making a lower high? And I think this is on a lot of people's mind. Is this a potential lower high? Yes, it is, right? And that is something we need to pay attention to. Does the NASDAQ fail here and potentially move lower? Is this a failure to move higher? Is this a failure to make a new high? That is definitely something to be watching, and this is also very apparent on the S&P 500, which we will get into in just a second. Now, the downside came in. It came in aggressive on Friday. It pretty much gave back the straight-up Tuesday move, and this right here is the argument for to be a little bit cautious or be a little bit patient. So if we look at last week and we really just think about what happened between Monday and Friday, we obviously had a day off on Wednesday where we had the obviously Christmas and the day off from the markets. And on Tuesday, we had a half day. Now, on that half day on Tuesday, we pretty much just went straight up, right? Straight up on a half day with low volume. Do you trust it? Not really, right? And so if you're understanding markets and you understand what that did, you probably should expect the markets to give some of that back, right? So that's pretty logical in my opinion, especially after hitting a major supply. Now, when we moved back lower on Friday, we pretty much just gave up that Tuesday move and we stayed within the Monday low. So pretty much all week, right, starting Monday, which is right here, this is Monday, and into Friday, we basically went nowhere. We stayed within the exact same channel between 21,514 and 22,120. So while the downside was emotional on Friday, and while the sort of movement last week was potentially emotional for some, if you zoom out and you get off the nanosecond chart, we really did not go anywhere. So that's the first thing I want to point out. Before we start screaming and calling a top here, we also need to know, hey, the markets maintained a very key level here. We stayed above the Monday's lows, and the market really did nothing as we approach 2025. So let's make sure we preface that as well. Now, this yellow zone below, which is where we held both Monday and this Friday of the previous week and the Friday of last week, this triple bottom that you guys see right here, there is a very important level here. There is a level that if we go out to the daily chart, it is more than just something short term. This is a major spot. This is a very important spot, and I'm going to try to get you the best look at this. What I'm going to do here, 1 second, I'm going to go ahead and delete these lines and just have that 21,514 on the charts. So guys, here is your NASDAQ futures, the daily chart over the last year, and what we can see here is that back in July, we have a major previous high. That was the exact high being 21,514. 21,514 was the exact previous all-time high here on the NASDAQ futures. That high led to a month of downside, right? And since that point and hitting that 200 SMA, we have been grinding back up into it. Now, what you can notice here is that we had another failure here in November, slight failure of that high, and of course that same high there. Now, this time around, as the NASDAQ has squeezed above this level, we are coming back down to retest that high. And that exact previous high at 21,514 that also rejected here is the exact low that stepped in this week. So this makes the case of, okay, we are still holding above that major daily previous all-time high, right? If we look at this chart right here, take a look at 21,514. That was the exact lows from Friday. That was the exact lows from Monday. And that was the exact low here in the Friday after hour session last week. So we can see, and of course, this was also the exact low that held on that major downside Wednesday of last week as well. So you have to look at this and say, hey, a little bit of downside last week, pretty much staying stable. But guess what? When you zoom out, this is still a very interesting hold at 21,514. You can see the defense here by the bulls. That is the major previous all-time high. And until that breaks, you really can't flip too aggressively back to the short side here. Until this previous all-time high breaks, until we see something along these lines, right, and a failure to hold above it, then I would definitely, in my opinion, stay on the long side, right? Stay confident that this level is trying to hold. If this level fails, then that's why we make this video and that's why we do our analysis. If this level fails and we see rejections back under this high and back under this high, well, yes, I would agree. We could be in for some further downside, and that is using that level to sort of guide our decisions. So if we pop on a few other levels here and get some more detail, let's go back to the hourly chart. We know about that 21,514. We just talked about that. That's the big spot. That's why that area is gold for me. That's my golden zone next week, right? I told the group and myself, as long as we're above this high, I stay on the long side. But if we start to break this, I definitely need to adjust. Now, the next level I want to talk about is 21,700. I'll put that at exactly 21,700. Let me go ahead and talk about this level now. This was a major previous low that set up and developed here in early December, right? We can see right here, major previous lows, 12,700, which led us higher on this market. Now, when we dropped on that Wednesday of the previous week, we can see that we saw a very nice break and retest rejection, which led to further downside back on that Thursday of the previous week. So we see right here, major 21.7 that was holding the market. We slipped below that on Wednesday, popped into it on Thursday, and that was the level that kept us lower. Now, what we can see is that since the market maintained this 21,514, it went ahead and reclaimed that 21,700 right here, 21,700. When we reclaimed that here on Tuesday of last week, we got that push to the upside. Now, what's interesting here, at close of Friday, we went ahead and popped right above that 21,700, which is very, very interesting and something to watch. So if we zoom in on this short-term price action, we can see on Friday, after failing 21.7, aggressive selling. We failed to get above it majority of the day. End of day, a little bit of an end-of-day squeeze and a close right above 21.7, which is quite interesting because if we zoom back out and we get a little bit more time here, 21,700 is these exact lows that held this market higher previously. So we need to be watching that 21,700. That I think is going to be very important heading into next week. Do we create a higher low at 21.7 again? And does that help the NASDAQ back higher? So for me, some key points here, guys. Number one, the major previous daily all-time highs, 21,514, anywhere down to around this 430 level, which you can see has been tested in the past, 430, 430, 430. So this is my zone, 21,514 to 21,430, which also has, which I haven't mentioned yet, has an uptrending 50 SMA that could be a sort of catalyst or launch point for this market if we can continue to hold that daily 50. Now, above that level, I would like to see the market hold above 21.7. If it does, I think you can grind back higher. If we turn that back into a rejection, then we're coming back and testing this major daily demand. Above, we obviously still have this major supply at 22,120, which will have to be a place of caution on the long side for rejections again, right? That is still very important there. And to the downside, a few levels that I would be watching. Let's go ahead and zoom back out. A few levels that I would be paying attention to on the, further when we zoom out here. Number one is 21,200, and number two is 21,000 even. 21,200 and 21,000 even are my two demand levels below that I would be watching. You guys can see right here, This 21,000 even was a major, major hold from that major downside the previous week. And then once we reclaimed the 22.2, that's where the market started to push back higher. So if we break below this yellow zone, then I think you will come back down and retest this 21.2 to 21,000 area. That would be in the next big test. If you hold above this yellow zone, then I believe markets can grind higher. If we maintain above 21.7, your next push would probably be back up into this major supply at 22,120. Moral of the story, guys, and for you, I think the most important takeaway is this daily chart, and it's the fact that even through some emotional downside last week, we are still holding above this previous all-time high, and that really is going to be the major test as we approach next week. So that's the NASDAQ futures. Let's go ahead and move on to the QQQ. So guys, we're going to start on the QQQ in a similar fashion. We're going to look at the daily chart and really zone in on those major, major spots. And for me, that July high, which we just talked about around 21,514 on the NASDAQ futures, remember, that's this level right here, 21,514. That level on the QQQ is 504. That is this previous July high right here at 504, which we held again here in late November and early December, which caused this market higher. Now, we have not come back to test that level yet. And you can see that the QQQ is well suspended still above that 504 level. Now, the previous high that is getting tested and that did hold very well is right here, and that is 515. So if I zoom in here on the daily chart, we can see that we had this major rejection point at 515, which you would call the previous all-time high, right? That's the most previous all-time high at 515. You can see that we moved higher, came back down, retested it, popped again, and here last week we see a very interesting wick, right? Bullish wick, in my opinion, off that 515 test. So if we go into the hourly chart and we go ahead and take a look at this, let's get a little bit more time and take a look at this on the hourly chart. We can see that those previous highs on the 1 hour chart right here, these previous 515 highs, definitely did their job of defending last week, right? We did not break below that. And so in my opinion here on the QQQ, you really can't get too bearish until this high breaks. If this 515 high breaks and we do fail below that, then I would say that is means to look for some downside, and that would probably bring us back to our major 504 low. And it just so happens that if you take a look at this major downside from the previous week, that major downside that we saw Wednesday and Thursday, guess where it held? It held at the 50 SMA and it held at the 504. So if we go to the 4 hour chart, take a look at how beautiful that hold of that July high was. That 504 major high back in July, that was the exact low that held on that major downside of last week, right? Very, very clean. 504, major high. Look at that hold that came in. That is very important. And I think that makes it quite easy to say, all right, if we fail below that 504, then it's game time, right, for the bears. If we break under that 504, if we turn that into a rejection, turn this into a rejection, turn this high into a rejection, then we definitely have some beautiful downside to trade in 2025. But that has not happened yet, and we have to stay on the side of this market still. 504, previous high, very strong hold. Here's your next high, 515, and if we zoom into this hourly chart, we can see how well that 515 held strong here last week. So these are my main two levels, 515 and 504. These are some big boys that you must have on your charts. Now, if we drop this down and look at some more short-term levels, you can see once again, I have my 505, I have my 515, big levels. I also have my 510, which is right at that 50 SMA. So down here, guys, you can definitely look for some demand holds at 515, 510, and this 505, 504. These are going to be some big spots on the downside if we get more downside next week. Now, to the upside, there is a very clear rejection that's coming in around this 525 to 526 zone. This was a major previous hold zone that is now turning into a rejection and definitely could be a reason for further downside. We can see right here, this is a 525, 526 right here, and right here. This was your rejection from Friday of the previous week. And you can see right here, guys, we failed below that on Friday. We popped back into it, but we never reclaimed it. And so for me, to really think that you're going to get another upside move on this market, I need a reclaim of this level. No questions asked. I need the markets to reclaim back above this major pivot point, this high from that Friday, and this low from Thursday of last week. I need that reclaim, and you should want that as well if you're looking to long this market. I would be very careful longing back into the daily 20 and longing into this major supply above. If we can reclaim this, that would be the key for another strong move on this market back up to 533 on the QQQ. So Monday, next week, all next week, watch this 525, 526. If you reject, you're likely to see that 515 get tested again. However, that test of 515 could again be a very nice long opportunity. Watch these levels, trade off these levels. Do not trade with a bias. These levels are clean, they've respected, and it's something you can continue to trade off into next week. All right, guys, so we're going to go ahead and move on to the S&P 500, and we can see here this is the 180-day, which is really, I just have this zoom back to October, which is obviously the previous high on this market, and I have the 4-hour chart. And what is very clear here on the S&P 500 futures is that we are still in a bullish structure on this market, right? We are still making higher highs, higher lows, but we are definitely testing that structure as of Friday of last week. And so what we can see is that on that major drop on the market, we had that test of that 100 SMA, which very aggressively bid back higher. Now, when we bid back higher off that 100 SMA, there is a major spot that has now reclaimed and keeps me bullish in the short term. And that is, my friends, 59.75 to 59.93. You could call it 6,000 flat, which I've seen a lot of people talk about. I would possibly push it into there as well. It really doesn't hurt to add 7 points on the ES into your zone. So you can see right here, guys, we had major previous rejections on the S&P 500 futures, which dropped us back into that 5,800 support. That 5,800 popped us higher. We reclaimed that previous rejection point and pushed. That push retested and held, which sort of pushed us higher all of November. Now, this time around, we got a drop into the 100 SMA and a quick reclaim right back above these highs. You can see how these major highs right here have now turned into the must-hold level of last week. So if I go ahead and zoom in on this on the 1-hour chart, take a look at where the S&P 500 held as support 3 times Friday of the previous week, Monday of last week, and Friday of last week. Look at those holds at that exact zone, the previous all-time high zone. That is very interesting. Hold, and hold. That is telling for the moment. If the buyers and the bulls can defend that zone, this has every possibility to push back higher. That is the must hold level, in my opinion. And you can also see how that zone had its chance, right, to drive this market lower. This zone and the sellers had their opportunity for this to be a lower high and a major fail on this market. However, it was defended aggressively and it was reclaimed quickly, almost just pretty much within hours the next day, right? And so that is very interesting. The sellers had their chance to really fail this market here. 100 SMA heavily stepped up, and the reclaims came back in. So in my opinion, you have to trade with the level here. You cannot just sort of guess that there's a new high forming on this market. That level will tell you what you need to know. If we fail back below this previous high and these lows from back in November, and we really turn this into a rejection point, then that is every reason to look short on this market, right? That is every reason to look for downside. If we fail under this level, make sure to pay attention to that, because that would definitely be a reason for shorts. Now, as of now, we can't get that into our mind because guess what? It's still holding, and that could be a very interesting long opportunity for this trend to continue, right? Everyone wants to be so quick for the reversal of trend, but if we zoom out, guys, on the 1 hour or on the daily chart, this trend has been going on for an entire year. And I would stay on this side of a year-long trend. There could be a sign of some topping action. There could be some drawdown, some downside. But I would want to stay on the side of this year-long trend as long as these levels stay valid. And for now, that level, that 6,000 to 59.75, is absolutely still valid. Now, here is the more bearish sort of lower high read that you could be paying attention to. I'm actually going to delete this for a second to make this a little bit more clean. What you can see here, guys, is we have our golden zone, which is our 6,000 to 59.75. That's the same level we just talked about. Now, what's apparent and potentially bearish or a sign of some bearish action is this right here. 6,110 to 6,120. Major fails, major fails. This was a previous low. And after that major drop, we retraced. But guess what? We may have seen a lower high get created. And I've seen a lot of people talking about this, and I do agree that this is something to pay attention to. Major highs, major highs, major highs. Here's your low that needed to hold. You obviously failed that, and look what happened. You made a lower high. You made a high equal to these, right? That is a lower high on the S&P 500 futures. Here's one, here's two. That is a lower high, right? And so that's sort of concerning, right? And that's something to pay attention to. So 6110 to 6120, that is a very big level here. If we do get a push to the upside in the next few weeks, that is something to watch out for up in that 6110 to 6120. That also happens to be your daily 20 SMA, which is really something you want to see the markets get back above in the short term. So we are watching very clearly our 59.75 to 6,000 zone. We're going to watch our 59.30 and our 58.90, which is the 100 SMA. And we're going to be very, very cautious of the fact that this supply has sort of set in. That is something to watch into end of year. All right, guys, so we're now on the SPY ETF, and we're going to do that same zoomed out look. And the thing I want to point out is, once again, this major previous high on the SPY ETF, that was 584, 585. That was also that major hold here from back in November, right, that we had a break and retest along off of. Now, this level, once again, is still holding. And there's really no reason in my eyes to start getting super bearish on this market if this level is still holding. If you got super bearish here and you were shorting into this level, you got smacked. This is the same thing here. There's no difference. You can see the market came down, it held it strong, it reclaimed it aggressively, and pushed back higher. This is something to really stay cautious of and make sure you're paying attention to if you are looking for downside on this market. That is a major hold, 585, 584, major previous highs that is still intact. Now, below that, you had a very strong hold of this zone low, this channel low at 580 or 578. That's also right near that 100 SMA now. So the big two levels below for me, 585, 584, and this 578. These are some big demands down below, and you are still holding above them. Now, the next level I want to talk about, we're going to go into our shorter term levels, and we are going to talk about the 589 to 590. So you can see, once again, we have our same levels here, our 585, 584, that is our golden zone. The next zone that I would be paying attention to here on the 1 hour chart is the 589 to 590 zone. You guys can see right here, that is, let me go ahead and move this really quick. Right there, that's where that should be. Just making a quick adjustment for you guys. The next level that is holding as of Friday, you guys can see right here, is this 590 to 589. Right here, we have major holds, we have major holds, and we have holds there again. This is the same level, right? If we take a look at this, this is the same level that corresponds with our 59.75 to 6,000 zone on the ES. Hold, hold, hold. And if we go to the SPY, that is the exact same area. Hold, hold, hold. That is 590 to 589. A little bit of a dollar range right there. And that is still holding. So as long as the SPY is still above that zone right here, and really still above that major 585, 584, there is still very good reason to look for some demand to hold down at these lows. Now, of course, we go back and we talk about that lower high read. Let's go ahead and see where that steps in on the SPY. And that is still very apparent. Previous low, previous low, previous low, previous low. Take a look at that lower high that was created on the SPY at 602.50 last week. That is a major previous low that we broke and retested, and you can make the case for that being a lower high. So right now, it really does seem like there is a very sort of balanced and sort of very focused on level here, right? Or channel. You have this major 602.50. You have these major demands down below. Which side is going to win here? I think the markets are going to have to likely sort of channel within here for a little bit, right? We might start to get a little bit of a slowdown within this zone where you start to see that sort of tug of war between buyers and sellers, between this major high and some of these major demand lows. Which side wins? That's going to be the question. But for now, if you want to stay on the side of a bigger picture trend, which is obviously this daily chart, then I would say you make sure to pay attention to those demand lows maybe a little bit more, right? I think the demand lows should be stronger as you are in that year-long uptrend. Now, of course, you could still be careful up here, right? If you do take some longs off some of these low levels, then I would still be a profit taker into this supply high, but I would just be a little bit on the side of the trend, right? I don't think it's right to be contrarian just yet. Now, if we start to fail these levels and we start to break and sort of pierce below demands, then you definitely know and you can get more confirmation that this lower high has started to develop and start to really pick up some sellers. For now, I say trust these demand lows, 590, 589, 585 as well, and just be a profit taker up in the 602.50. If we get above 602.50, then this market goes back to new highs. So guys, the next thing I want to talk about is the SOX. This is the Semiconductor ETF. This is sort of a wedge that I've been watching, and I want to talk about something that sort of happened here on the daily chart last week, and I think it is quite interesting. Right here on the daily chart, you can see, in my opinion, a pretty bullish candle coming off the pretty much the rainbow of daily SMAs. So if we go here on the 30-minute chart on the Semiconductor ETF, take a look at these SMAs. These are the daily SMAs. This is the 50, the 200, the 20, and the 100. The yellow's the 50, the red's the 200, the blue is the 20, and the green is the 100. All of those daily SMAs stacked up right here, being the exact low that held here on Friday of last week. That SOX daily demand, right, that daily SMA hold area right here, I think is definitely something to be paying attention to, which could ignite some more semiconductor strength. And the thing that corresponds with the SMH, which you guys know has been something I've been tracking, that corresponds with the 245 level. You guys can see right here, 245, 245, major hold there on Friday at $245 per share. That is still above the 100 SMA and still grinding above our 200 SMA. I think that is a very big spot. So $245 on the SMH, and if I zoom out, we can see that dates back much further, right? 245, 245, 245, 245. And again, here on Friday, we have this hold of 245. That likely could hold this SMH market higher, pushing us back into the 254 supply and possibly back into the 257 supply. Major holds are still valid on this SMH. You guys know I've been tracking this move. For now, it is still valid. It has taken a lot of time, but it has remained valid. And I think that is a very interesting daily chart, daily candle here. If we take a look at this SOX, you guys can see, look at that daily candle off those daily SMAs. I think a pretty bullish hammer candle there. Obviously, it did close red, so I'm not sure you consider that a hammer, but you can definitely see those wicks, or that wick that formed off that daily SMA area. So something to be paying attention to there on the SOX, I believe, and of course the SMH still holding that 245, I think is very important. Let's see how this really chop that has been here on the SMH for almost 2 months now. I really want to see how this plays out. I think there's a lot of money to be made here. Obviously, it's been a little bit more time than I expected, but the game plan is valid, so I have to stay true to the idea of the semiconductors maintaining. All right, guys, so we're going to talk about Tesla and NVDA. These are two trades that I have been holding and something I want to review with you guys. Obviously, some of the bigger names that have been being watched on the market, and I hope that this helps you as well. Here's my read on Tesla. You have major previous all-time highs on Tesla at 414.50. That is the major previous all-time high. But you could also say that the 400 level is major as well. You had a little peak at 414.50, but you have these major triple top at 400 flat. So I think 414.50 to 400 is a major zone that if we hold above should keep Tesla bullish. And if we go into the short-term time frames here and we go and zoom into the short term, you can see that this 400 to 414.50 zone has maintained still very nicely. Now, of course, we've been sort of consolidating above it. We've had our ups, we've had our downs, we've had our ups, we've had our downs, which is consolidation above that 414.50 and above that 400 level. This is the previous all-time high. That was a previous all-time high from 2021. That is a very major. Let me make sure of that. I want to make sure it is 2021, but I'm almost positive that was 2021. That was 2021. Yes. So we can see that, yes, we have been sort of sideways on Tesla. We haven't really continued the straight up move, which I know everyone loves to see on Tesla. You can't go straight up, but you can stay confident. And I think you stay confident on Tesla to continue higher as long as it's above 400 and 414.50. That is a major 2021. That is 3 years ago that we had that high that we are holding above. I think there is going to be a strong attempt to maintain above that previous high, and I would continue to look for this zone right here to be your buy zone. If you can get an average in this 414 to 400 zone, I think that is a fantastic average that has already shown you that it is a good average, right? Right here, long, right here, long. That has already shown you the possibility that you could try to catch off this zone. You also have a 20 SMA that is starting to catch up to price action. You have not pushed off the daily 20 SMA in some time here, right? The last time you got the liberty of holding that daily 20 was back here. A little bit right here, but really since that point, it has been very extended, right? See all this zone right here over the daily 20 SMA. And so this is now very interesting because you have got a time and price correction, right, on Tesla, and you have the daily 20 SMA now possibly being a major support of price action. This could still get very interesting, and I would be paying attention to this into 2025. Next stock we're going to talk about is NVIDIA, and this is where we're going to end the video after this one. Now, NVIDIA is something I have been trying to stay very, very confident on, and there's a few things I want to talk about. I want to talk about the bullish, but also the bearish side. So here in NVIDIA, the bullish read for me is the 135 inverse head and shoulder. You guys can see right here, we have a 135 hold, we have a 135 rejection, right? And you have this major left shoulder right here. You have this 135 sort of head, and you have this 135 right shoulder. That is the lows here at 135. That is the lows here at 135. And really, you can bring this down to 128, where it should be, 127, 128. Right here is 127, 128 on NVIDIA, which is a major low I'll talk about in a second. But you can start to see, in my opinion, somewhat of a 4-hour, and I'll go to the 4-hour. You can see a 4-hour inverse head and shoulder here on NVIDIA. You can see this is the left shoulder, this is the head, and this is the right shoulder. And for now, I think you need to defend that 135 level. If you can defend that 135, I think NVIDIA can stay bullish. The neckline of this area, of this inverse head and shoulder, is very clearly 142. 142 looks like it's the level that needs to break. It is once again a level that has rejected. Now, on the bearish side, there is still the case that this is just in a 4-hour downtrend that is going to continue. You guys can see right here, here's your high, here's your high, here's your high, here's your low, here's your low. This, for now, can be considered just a 4-hour downtrending move that might continue on NVIDIA. I think that downtrend will continue if you fail back under 135. A failure back under that level, I think, would be a little bit of a killer for the bulls, probably get the bears back excited for a move back down towards that 130, 127 zone and back towards that 100 SMA. If we go to the daily chart, we do want to make sure we pay attention and not discount the fact that there is a very strong demand below. This 127 to 130 zone is a major previous high that is very clearly held multiple times on NVIDIA. We have a major high here that has held here, 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 and once again previously here off of the daily 100 SMA. That is still a very interesting potential for what I would say looks like a possible bull flag, right? A possible bull flag, but we need to create some higher lows. We need to hold this low, and in my opinion, we need to see this 4-hour hold the 135 level. Right here, I really think you need to start creating higher lows, and for me, that is right here at 135. Here's a low, here's a higher low I want to see form to try to break the downtrend and start to get out of this downtrending move. I think you need to start creating a higher low around 135. That is something I will watch, and of course, we need to get above 142. So next week, 135, eyes are peeled. If we do break below that, I think you got another date with the 100 SMA below around that 130. This video is getting pretty long, but I hope you guys did enjoy it. We went over Tesla, NVIDIA, and all of the major market futures and ETFs. If this did help, guys, press that like button, subscribe to the channel. Thank you for watching. If you want to join the Discord, once again, use code NYE, New Year's Eve, but just NYE for 20% off the group, off the community. Press that like button, subscribe to the channel, and I will see you guys in the next one. Peace out.